Let's get started on YouTube as well. Sorry about the late start on YouTube. Thank you very much, everybody, for joining. I just read a few of the. I'm waiting for confirmation right now that would look good on YouTube. I just read some of our early data. Tesla's down about 5%. Nvidia is down 6%. S&P 500 down 4. Dow Jones down 3. Nasdaq down 5. Russell 2000 down more than 5%. Remember the people who were saying, "Oh, buy Russell 2000." Back mid of last year. Looks like YouTube sample is fine. Crude oil is down 7%. Gold is down 1%. And we were just talking about Nike. Nike is down 12% today, but still not cheap. It's on my list of stocks that I'm kind of considering buying, but I think it's early to pull the trigger here. Um, I don't know where I would buy this, honestly. I think it may drop to, I think below $40 per share could be a good purchase price for Nike. Um, but we'll wait and see for now. Wait and see. We're going to be data dependent. Um, Treasury yields are down substantially as well. 10-year Treasury yield is down 14 basis points. I think in the morning it saw as low as 4%. Now it's about 4.05, 06%. In the morning, 10-year Treasury yield is down to 4% flat. Yeah. I think the yield curve, I was watching an interview today with Drew Mattis of MetLife, and he mentioned how he believes the yield curve is overreacting right now. And I agree. I don't think this 2-year yield, um, or let me put it this way, the market is pricing in a 25% probability of a rate cut in May, and I think that's crazy. I don't see how the Fed could turn around and cut rates at this time when inflation expectations are surging. 5-year break evens, 10-year break evens, all the survey data, most of the market data is showing inflation expectations are rising. And I think that it's going to be some time before that changes. Like it would take an act of God at this point for inflation expectations to drop with these tariffs. I don't see how inflation doesn't go up from here. And it's starting from a high point. It's starting from 2.5, 2.6% inflation right now. By some measures, it's as high as 3%. And so, yeah, we'll see. We'll see. Any questions, comments, please request to speak. We're going to go through our usual reading of the Reuters article of the day. And then maybe we'll dig into some of this economic data. There's an interesting earnings report that came out yesterday. Restoration Hardware that tanked the stock 40%. Restoration Hardware is one of the companies I was looking to short, but I didn't. And I want to understand why the stock dropped 40, 50% this morning. Because housing sector is important, and Restoration Hardware is an important company. Once again, give me 1 second. I have something that came up real quick? All right, let's continue. Let's read this article real quick, and then we're going to go into some of the details. U.S. tech retail stocks lead rout after Trump's tariff blow. Mega cap U.S. tech companies, including Apple and retail giants Walmart and Nike, led a global market meltdown as President Donald Trump's sweeping new tariffs heightened fears of a spike in costs across a wide range of industries. The tariffs, which threaten to destabilize the world trade order and unsettle businesses, mark a sharp reversal from just a few months ago when hopes of business friendly policies under the Trump administration pushed US stocks to record highs. The tech Trump said he would impose a 10% baseline tariff on all imports to the US and higher duties on dozens of other countries, pushing US tariffs to the highest in more than a century, according to Fitch Ratings. Analysts and economists warned that hefty tariffs on imports from Asian manufacturing hubs and potential retaliatory measures could rattle global supply chains and dent corporate profit margins. These actions could potentially shave 1 to 1.5% points from growth this year, Deutsche Bank senior US economist Brett Ryan said. By the way, that is very consistent across all the interviews and everything I read today. People expect 1 to 1.5% drop in US growth. And if you remember, in the last Fed meeting, the dot plot showed a forecast of 1.7% growth for 2025. And then after that, GDP now started showing some deep contractions in Q1, like -2% or so. So I think the Fed will lower its estimates further in May for growth, but inflation expectations are rising. So we are entering a stagflation situation here. So I don't know what the Fed is going to do, but I suspect they're going to want to wait for a few months for these tariffs to work through. Nobody really knows what tariffs will do to inflation. People are guessing. The range of the guess estimates are very high because we don't know how the consumer will react. We don't know how other countries will react. We don't know how companies will react. Are they going to try to pass on the cost increases? Will consumers switch to other goods? Will they even be able to afford any price increases? Will consumers be able to afford the goods and services if prices are increased? How do the companies react afterward if consumer says no? So there's a lot of different things that are at play here. But make no mistake, this is kind of like watching a slow crash, a slow train crash. Like the train is headed in the direction of a crash for sure. But it's going to take time. It's going to take time. People, countries, and countries, and companies will react differently, in sometimes in irrational ways, and that potential irrationality is the reason why it's even if you had all the compute power in the world, like I don't know if you can predict that. Um, okay. Apple shares fell 9%. More than 90% of its manufacturing is based in China, one of the hardest hit countries by tariffs, according to an estimate from Citi. So I wouldn't be surprised if this is the reason why Warren Buffett unloaded most of his Apple shares over the last few months after Trump got elected. And maybe he was paying attention to what Trump was saying about what he wants to do with China. Their effective tax rate now, or sorry, effective tariff rate now is something along the lines of 50, 60, 70%. There's a possibility that because Apple indicated that they're going to move some production to the US, that Trump may give them an exemption, but We don't know when that's going to happen, if it's going to happen, and how much of an exemption, if there will be some sort of a time limit attached to it. We don't know. But the market is not asking questions right now. Market is selling Apple stock, and it's kind of stunning to see Apple down 8, 9%. I mean, we're talking about $300 billion of market cap erased. And Apple has majority of its balance sheet in cash. So this is a significant hit to the enterprise value of the company. Um, all right, let's continue. Rosenblatt Securities estimated that the iPhone maker could face $39.5 billion in tariff costs, adding that if these costs were just eaten by Apple, we estimate a near 32% hit to operating profit and EPS annualized. Makers of PCs and AI servers will be hit hard as well. The US imported nearly $486 billion in electronics last year, the second biggest sector for imports after machinery, according to Census Bureau data. Give me 1 second. Let me see if there's any questions, comments on YouTube. Okay. PC makers, including Dell and HP, could face cost increases of about 10 to 25%, adding between $200 and $500 in costs per unit, said Tony Redondo, founder at Cosmos Currency Exchange. That would squeeze margins at the companies or force them to raise prices, potentially dealing yet another blow to PC demand that has already been choppy in recent years. Shares of Dell and HP were down about 15%, 12% respectively. The tariffs would make AI service pricier too, potentially adding millions in extra costs and upending AI development plans at big tech. Microsoft fell 2.6% and Alphabet tumbled 4%. Semiconductors were not named in the list of goods subject to reciprocal tariffs, but they would still presumably be hit by the 10% baseline duties, analysts said. Major US retailers, including Walmart, Amazon, and Target, which count on several Asian countries, including China, as key suppliers, could be forced to raise prices, slumped between 4 and 11%. Among the major global production hubs, China was hit with an aggregate tariff of 54%. Vietnam was slapped with 46%. Cambodia with 49, Indonesia with 32% tariff rate. Yeah, I mean, what this sentence doesn't say is that China is not starting from zero. So the effective tax rate is more like 60, 70% on imports from China, which is insane. I mean, that's crazy. Sportswear retailers Lululemon and Nike declined 13% as their key sourcing partners were hit with steep levies. With Asian production hubs particularly hit, all footwear and apparel company margins will be affected as costs rise, Jeffries analyst said in a note. S&P 500 retail index fell 6.8% to hit its lowest since September 2024. Now we're going to go into segment by segment, but before that, I want to kind of pull out this tweet by Mark Cuban. Mark Cuban posted last night, and said something like, man, he posts a lot. Jeez, slow down, man. Where is this tweet? I can't find it. But actually, I need to check that first because somebody sent me a Mark Cuban tweet. But I don't know if he actually tweeted this because I can't find it. So maybe he didn't tweet it. Let me see. Oh, yeah, he posted some Blue Sky, apparently, not on X. That's why I can't find it. Okay, let me see 1 second. That makes sense. Or I doubted the person who sent this to me. Yeah, there you go. He goes on Blue Sky. That's funny. He actually posts on Blue Sky, not on X. Mark Cuban says it's not a bad idea to go to the local Walmart or big box retailer and buy lots of consumables now. From toothpaste to soap, anything you can find, store space for, buy before they have to replenish inventory. Even if it's made in USA, they will jack up the price and blame it on tariffs. Yeah. Um, I mean, I think this is possible. I don't know how much you would be saving by doing this, maybe a few $10 or something, but eventually the prices will go up. And I don't know. I think people are really overestimating the consumers, whether it's the low income, middle income, or high income consumers, to be able to absorb this tariff war. I don't think they can. And I think that's why the long term yields are dropping so much. I don't think the consumers today have the ability, the bank accounts, the earnings power, the balance sheet to absorb these 20, 30, 40% cost increases. So I think um, manufacturers will try to pass it on. Producers will try to pass these costs on to the consumers. And some of them have already started in March. We're already seeing inflation numbers forecast increasing a little bit, break evens rising, 2.5, 2.6%. Some of them have already started trying to pass on these cost increases in anticipation. And I think that's because of recency bias. I think what happened in COVID when these companies uh, couldn't or they were late to increase prices and ended up having these year-long waits and running out of goods to sell or running out of people to hire. I think because of that recency bias, many of these producers are trying to pass on the cost increase to the consumers early on. But I think what's going to happen is consumers won't be able to buy. They're going to significantly restrict spending in April, May, June in Q2, and we're going to have a recession. And I don't know how the tariff war is going to end. Hopefully, with lower tariffs overall, but the probability of that it appears to be very low. So, um, yeah, next few months, I think still very uncertain because the problem is Trump must have hundreds of billions of dollars, must raise hundreds of billions of dollars from tariffs. He's counting on that to be able to extend tax cuts or even further lower them. So I don't know how that's going to happen. Um, I think the Trump administration is hoping that they're going to be able to raise $600 billion from these tariffs and get closer to a balanced budget. But if consumers restrict spending, then you can actually end up in a net negative because of these actions. Especially if these markets continue to decline. Like I don't believe for a second that the Trump administration is not looking at the stock market. That doesn't seem very believable to me. And if you erase tens of trillions of dollars from global asset markets because of this tariff war, which could happen, and if it happens, it's going to happen very quickly. Um, then I don't really understand the value of a couple $100 billion you may have raised. You've made people poor. Your country depends on consumer spending. 70% of your country depends on consumer spending domestically, and they're watching their 401ks decline. Um, yeah. So maybe they know something I don't know. Um, but I think most people agree with me today, at least all the economists agree with me today, that this tariff war mentality appears to be a bit kind of short-sighted. Let's continue. Let's dig into a bit more. Let's dig into a bit more sector level news here. We talked about the retail. S&P 500 retail index fell 7% to its lowest level since September 2024. Big banks, major Wall Street lenders, including JP Morgan Chase and Citigroup and Bank of America, which are sensitive to economic risks, dropped between 7% to 11%. Yeah, so I mean, between long-term rates, the bank stocks, the market is starting to price in a recession here. Declining equity valuations alongside a muted recovery in M&A and IPOs have raised fears that investment banking income could come under pressure. Weaker consumer confidence may also temper spending, hurting loan demand. Regional banks were also lower, with Citizens Financial and US Bancorp among the losers. S&P 500 banks shed 8%, while the regional bank index shed 8.9%. Car makers dipped, with Ford and GM down 4% and 3% respectively, as all the tariffs were set to kick in on Thursday. EV makers such as Rivian fell 5%, Lucid 2%, while Tesla was trading 7% lower. There's a lot of dip buying going on in the markets today. I mean, in the last few days, really, not just today. Last few weeks, retail investors are buying the dip in popular stocks such as Tesla and Nvidia, and other stocks as well. But um, I think that this is the wrong move to make. But who knows? I need to change the name of this space. Give me 1 second. Tesla will triple in 2022. I remind myself I can be wrong. Um, Tariffs are expected to cost an additional $2,500 to $5,000 for the lowest cost American cars, and up to $20,000 for some imported models. And U.S. consumer impact is estimated at $30 billion for the first full year. Anderson Economic Group estimated. Ford announced discounts for several models starting Thursday, leaning on its healthy inventory to offer customers thousands of dollars off as rivals hike prices to absorb tariff costs. That's interesting. That's an interesting move by Ford. Let's look at that a little deeper in a second. I'm going to pull that up. Pharmaceuticals were temporarily exempted from tariffs, helping shares of major drug makers Pfizer and Johnson & Johnson to weather the market storm in early trading. J&J rose 3%, while Amgen and Merck rose 1% each. Still, UBS analyst said pharma was not yet out of the woods. Trump has an appetite to effect change in the pharma industry, which could include a separate round of tariffs or a phased approach for levying duties on treatments. US drug makers were lobbying Trump to phase in tariffs on imported pharmaceutical products in hopes of reducing the sting from charges and to allow time to shift manufacturing. Reuters reported earlier this week. Shares of glucose monitor maker Dexcom and GE Healthcare fell nearly 9%, leading declines in US medical device firms whose supply chains and revenues are at risk from the tariffs imposed on China, the European Union, and Mexico. Energy. Energy stocks and crude prices fell sharply on Thursday, despite imports of oil, gas, and refined products being exempted from Trump's new tariffs. Brent crude and US WTI were down. See, this is another indication that the markets are pricing in a recession. So we have declining long-term rates, yields. Energy prices like oil is down a lot today, 7% or so. And some of this action in stocks. Gold is also down. Interesting. I think gold got a little too popular. I'm starting to hear from everybody now. Should I buy gold? Um, Brent crude and US WTI were down among more than 7% afternoon trading, weighing on oil, refinery oil field service stocks, producers APA and Devon Energy, along with oil service company Halliburton and refiner Valero, were the top losers in the segment. Despite energy being left off the list, crude prices are feeling clear downward pressure today, largely driven by renewed fears of a global economic slowdown. There's also one more thing that they didn't mention here. Let's see. Investors are grappling with the idea that aggressive tariff policies could further suppress demand growth worldwide. He's like, adding that OPEC's surprise move to accelerate output increases has exacerbated market softness. Yeah, I mean, that's another factor here. OPEC plus increased oil production more than people expected. All right, so I guess the last shoe to fall here is going to be unemployment rate rising. Tomorrow, Powell is going to speak. Like I said earlier, there is a 25% probability that's being worked the um, into the um, bond prices that shows may cut 25% probability of may cut, which I don't think is going to happen. And I think when the market wakes up to that it's not going to happen, we're going to have further drops in these stock prices. And Powell is speaking tomorrow. Let's see what time. By the way, I'm finding out increasingly that Gemini might be the best AI right now. Gemini, especially their deep research, and Gemini Advanced, um, consistently is giving me the best answers. For your reference here, the calendar, 11:25 a.m. speech, Jerome Powell, economic outlook, April 4th. Yep, 11:25 a.m. Economic outlook at the Society for Advancing Business Editing and Writing in Arlington, Virginia. Interesting. Um, and then 12, we have a speech by Governor Michael Barr, and then a discussion at 12:45 by Governor Christopher Waller in New York. Barr is in San Francisco, and I think that's about it. And then we have the minutes coming out on next Wednesday. Today, Vice Chair Philip Jefferson at 12:30. Well, that should have happened now. Atlanta, Georgia. I'm surprised we didn't hear about that one. Interesting. Let me see if there's any headlines about that. So Powell's speech tomorrow, I think, is giving the market moving. I think the markets are getting ahead of themselves about expecting rate cuts here. I don't expect any rate cuts in May and potentially in June either, but June definitely more likely to get a rate cut than May. May, I see the probability is like close to 1%. Yeah, I don't see any headlines from this vice chair. What am I missing here? Vice Chair Philip Jefferson. Ted Jefferson said QT can continue in the background in an orderly way. The rate at which we approach ample reserves is in no way affects the ultimate size of the Fed's balance sheet. Expresses concern over uncertainty from Trump's new tariffs on economic growth. No rush to cut rates. There you go. Policy well positioned. No rush to cut rates. Tariffs driving commodity inflation, economic outlook uncertain. Jefferson to monitor jobs and price close to no changes for now. I mean, this is what else do you need? You know, Um, it's too soon to assign productivity gains to AI. I agree. I don't want to overreact to what may be proposed today, as Jefferson said. Net effect of all policies that influence view on monetary policy. When assessing policy changes, I try to focus on collective policies, including fiscal and immigration regulation. Yeah. So there's no change to still substantial uncertainty around trade. Uncertainty can weigh on spending investment decisions. Will be important to take our time and think about impact. Exactly. That's fascinating. Will be important when assessing policy changes. I try to focus on collective policy, including fiscal, immigration regulation, net effect of all policy that influence view on monetary policy. Okay, so you basically said what Powell said last time. Long-term inflation expectations align with the 2% target, he says. Yeah, we'll see about that. Um, I think the Fed will be surprised. I think the Fed will be surprised by inflation expectations. I think they're prematurely overlooking these near-term expectations rising and saying long-term remains well anchored. Let's see other headlines. Nick Timiraos says bigger tariffs put the Fed in a difficult position. They are pulled between two conflicting goals, prices up, hiring down. Rate cuts cushion the economy by boosting rate sensitive sectors like housing and cars, but cars and main components of housing face big tariffs. Yeah, so basically what it's saying is this, look at tariffs as a supply side problem and, supply side driven inflation. And the Fed would be hesitant to add to that on the demand side by cutting rates. And that makes a lot of sense to me. So, um, so to the extent that people are expecting rate cuts, I think you're out of your mind. I think those people are out of their minds. Um, in the near term, in May, second half of this year is a different story, which I think we're going to a recession. So, in a recession, they would cut rates. Let's dig into this Ford news. Let me check if there's any questions, comments on YouTube. If you're watching this on YouTube, please hit the like button. It really helps grow the channel. Um, so take a moment to do that. All right, Ford offers across the board discounts, jumping on recent tariff induced sales bump. And if you're listening on X, you can subscribe to this account to support Tesla Live, or Tesla will triple in 2022, as the new name says. Ford Motor announced discounts across multiple models starting Thursday, leaning on its healthy inventory to offer customers thousands of dollars off as its competitors hike prices to absorb tariff costs. So how are they able to do this? That's what I'm kind of curious about here. Ford will offer employee pricing, a discounted rate available to its workers to all customers, the company confirmed after Reuters reported the news Wednesday. The program is called From America for America Plan and is available to US shoppers. The Dearborn, Michigan-based automaker builds 80% of its US sold vehicles domestically, giving it a greater buffer from US President Donald Trump's tariffs than some competitors. However, it still faces the prospect of steep levies on imported vehicle parts. The incentives apply to much of its lineup. You know what? You know why I think they're doing this? I don't think they're doing this because, for Americans, from Americans or whatever. They're doing this because people accelerated their purchases of cars from April to March ahead of these Trump tariffs. So I think that Q2 will have a bit of a hangover from this pull forward of demand into Q1. And that's why it's one of the reasons why I think we're heading into a recession. I mean, even Q1 is going to show negative GDP growth. And I think Q2 is going to show negative GDP growth as well, because of this pull forward event, especially if the stock price declines continue, then consumers will really pull back. Literally the last standing part cohort of the consumers, U.S. consumer, was the higher income folks because of this recent multi-year gains on their 401ks. But that could erase very quickly here. The incentives apply to much of its lineup, including vehicles like the Mustang Mach-E and Maverick that are built in Mexico. Some vehicles, including its lucrative Super Duty trucks, are exempt. Promotion runs until June 2. Trump last week announced 25% duties on all auto imports, which sent shockwaves through the global industry. The US is the world's largest importer of cars, and nearly half of all cars sold in the country last year were imported, according to research from Global Data. On Wednesday, Trump broadened the tariffs to a 10% baseline. We already read about all this. Ford shares fell following the tariff announcement, as did those GM and Tesla. While under Trump's order, goods from Mexico and Canada that comply with the USMCA trade agreement between the three countries will largely remain exempt from tariffs. All the exports and steel and aluminum fall under separate tariff policies. Barclays said Ford was best positioned to weather the tariffs given its high percentage of US production, while rivals GM and Chrysler parent Stellantis produce around half of their US sold vehicles domestically. Buyers have rushed to dealer lots in recent weeks to snap up cars before prices increase, boosting auto sales in March. There you go. Buyers have rushed to dealer lots in recent weeks to snap up cars before prices increase, boosting auto sales in March. We're going to dig into a little bit more because I want to see what data they have to support that. Ford's dealer lots are more stocked than the industry average, according to Cox Automotive. Ford had more than 4 months of inventory in February, above industry average of nearly 3 months. Cox also found that Ford's incentive deals were slightly lower than the broader industry in February, with Ford's deals amounting to 6.7% on average vehicle transaction price, while industry average was 7.1%. Okay, so now let's dig into the pull forward of demand here. This was published on March 11th, so this is a little bit dated, 23 days ago. But I want to see the data. So let's listen. After Matthew Mitchell heard US President Donald Trump was serious about implementing 25% tariffs on Mexico and Canada, he told his wife it was time to snatch up a car and fast. I was like, okay, we're going this weekend, Mitchell said. He raced to a dealership in Walnut Creek, California to land a deal on a 2019 Toyota Camry in early March to avoid any tariff related price hikes. Mitchell is part of a group of buyers who say they expedited their car shopping out of concern that Trump's tariff threats would result in showroom sticker shock. Right now, the levies are not affected dealer lots, which on average have a 3-month supply of vehicles. Many US automakers have already gotten 2 reprieves on tariffs since Trump said they would take effect in early February. But the uncertainty spurred people to react. Between February 16 and 22, searches on car shopping website cars.com jumped 9% from the previous week, said David Green, a cars.com analyst. Yeah, that's exactly what I'm seeing in data too. I'm seeing about a 10 to 20% increase in searches in recent weeks, year over year. So interesting. When the announcement of the tariffs first occurred in early February, it didn't register with car shoppers right away. But when the conversation turned to tariffs on all imports and the new auto tariffs were pushed to April, searches on cars.com really started to climb, Green said. Last week, a Reuters poll of 74 economists showed risks to Mexican, Canadian, and American economies are piling up due to the unpredictability of US tariffs, with rising expectations for both a recession and more inflation. Those concerns have caused consumers to grow more cautious. Across the border in Calgary, Canada, Darby Madalena dashed off to a nearby dealer lot to buy a 2025 Subaru Forester about a year ahead of her original plan. It didn't make sense to wait anymore, said Madalena. A Ford Mustang Mach-E that belongs to Philip Hodge, who bought it before tariffs began on vehicles imported to US from Mexico, is seen in a dealership in Farmington Hills, Michigan, US in this handout photo. Philip Hodge also finalized his purchase for a new Mustang Mach-E electric vehicle, knowing the Ford model was imported from Mexico into the US. I was like, let's just get it done now and not worry about it, he said. Car dealers say they have enough vehicles in inventory to weather weeks or months of instability. Dealers had an average of 96 days of supply on their lots in February, according to Cox Automotive, a 26% increase from the start of the year. Some dealers say the short-term uncertainty is a boon, as more customers may wander into the showroom. People start hearing about that tariffs are coming. They'll probably want to come and buy my cars out of stock, said Dearborn, Michigan Ford dealer Jim Sievert said. He said sales were very strong the week of March 3, but he credits that more to deals he was running, not tariff worries. Even so, some dealer web pages use the threat of levies as a sales tactic. One Subaru dealership in Connecticut blasted a banner on top of its website. Final clearance pricing on remaining 2024. Save now before tariffs drive prices up. Interesting. Cars have become less affordable since the pandemic, as the average vehicle sales price reached $48,641 in January, according to Cox Automotive, a 30% increase from the average $37,348 price in January 2019. Some buyers pushed up their purchases last year after Trump was elected, expecting that he would make good on the tariff changes he floated on the campaign trail. In early November, we thought we should probably get serious about this, said Saud Ansari, who lives in Cleveland, Ohio area. He finalized the purchase of his 2025 Toyota Sienna from a dealer near Columbus, Ohio, shortly before the inauguration. Trump delayed the original duties until March, and it added another 1 month reprieve for all vehicles compliant with the US Mexico Canada Agreement, rules of origin. But for Ansari, the threat of tariffs and concerns about higher interest rates was enough of a motivation. I'm glad to have it out of the way for a few reasons. Number one is the uncertainty ahead, he says. Okay. Yeah. So I think, like I said, we're going to see a big drop on consumer spending in April, in May, and June, all else equal, because of this pull forward event. GDP now was revised today for this Q1 seasonally adjusted rate to negative 2.8%. Gold adjusted GDP now is slightly more than negative 1%, so negative 0.8%. Okay. Like I said, tomorrow we have Powell speaking in the morning. I suspect he's going to not much. He's not going to change what he said from before. I think he's going to say, um, I think he's going to say that they need to wait to see how tariffs play out. The uncertainty continues. I think yesterday's tariff increases were an opening bid, so to say, so to speak. Um, and we're going to see how other countries react, how companies react, how consumers react, and the Fed will want to see all of that. So, with that, thank you very much, everybody, and I will chat with you all next time. Take care.